in this video, I'm going to go ahead and break down the ultimate guideline to always identify a trading opportunity in the market, regardless if it's a bullish type of day or even a bearish type of day. No matter what the landscape is, I'm going to go ahead and introduce you guys into an easy way to identify an opportunity to trade. Now, one of the reasons why I wanted to share this video is because oftentimes when people are looking to trade a stock, they're looking to trade anything, right? And that could be a problem because they may be trading something that's very volatile with low volume, like a penny stock, and then immediately switch over to a mega cap stock, which has a lot more volume but much less volatility. And someone who's experienced can bounce around from different types of stocks, but I find it much more easier to trade within a niche. This way you pretty much understand how a ticker moves. And so with that said, my personal niche tends to be trading mega cap stocks. However, in this video, I'm going to make it even much more simpler for you guys. So we're going to go ahead and hop into my laptop and break it down for you guys.
Alrighty, so we are officially in my laptop, and right now we're taking a look at ticker symbol QQQ, which is the NASDAQ Index ETF. And I want to go ahead and cover a few things. So as I stated in the beginning of this video, one of the things that traders are often doing is looking for a stock to trade. The problem is a lot of inexperienced traders may be hopping over from penny stocks to mid-cap stocks and mega-cap stocks. And the issue is those different types of stocks trade severely differently because the dynamics are different. And so what I often say is, from my experience, it's easier to trade something that you trade very often and identifying a niche. This way you tend to understand how that stock moves. It's not saying that a stock is going to trade the same way every single day. No, that's not what I'm trying to say at all. But when you trade something and you start to develop a pretty much understanding of how it most likely will move, well, you get to have this experience that provides you with an advantage, right? And so, I made several videos in the past or, explaining why I specifically trade stocks like Tesla and Apple. But in this video, I want to introduce you into a much more simple niche that you guys could take advantage of. So again, we're looking at the QQQ, and we saw that at around 10, we started to see this heavy selling pressure taking place. Now, this was due to some economic events that I'm not going to go ahead and break down in this video because I don't want to go off tangent and I just want to stick on topic, right? So again, we saw a lot of selling pressure. Well, you could go ahead and trade the inverse ETF. Now, what are inverse ETFs? Well, I'm going to go ahead and explain it and then show it to you guys. So inverse ETFs are financial products designed to provide, trading returns that are the opposite or a multiple of a specific benchmark. So an inverse for the QQQ would be SQQQ. So I want you guys to remember how this looks, right? Now, let's go ahead and hop over to SQQQ. So it's basically flipped upwards. It's reversed. So whenever the QQQ, the NASDAQ Index ETF, starts trading downwards, the inverse actually trades upwards. And so this provides some benefits in the sense that if you're someone who doesn't like shorting, maybe you don't like shorting stocks because you haven't done it so before, maybe you don't like the risk associated with shorting, and so perhaps you always want to go long. Well, by trading inverse ETFs, you can always be able to go long without having to short. So if the market's going downwards, you don't have to short to take advantage of it. You could just go long by trading the inverse short version of it, right? And so we see that while QQQ went down, SQQQ went upwards, right? Now, I want to go ahead and talk about something else associated with these inverse ETFs, right? And we're going to go ahead and hop over back to the regular QQQ, and we're going to go ahead and skip over to the prior day before, right? Now, something you want to understand specifically with these inverse ETFs is that they're also leveraged. So they're 3 times leveraged. So we had the QQQ, which sold off very heavily yesterday, but SQQQ, of course, did the opposite. It went up. But whatever QQQ does, SQQQ does times 3. So if QQQ went down 1%, SQQQ would go up 3%. So let's go ahead and map this out so you guys can see it for yourself. So yesterday, with this big selling pressure taking place, right, we saw that the NASDAQ Index ETF fell down about 3.22%, roughly around that amount, right? Now, if we go ahead and transition to SQQQ, not only did it go inversely up, but it's also leveraged by 3 times. So it actually went up not by 3%, but by actually 10.2%, right? And so again, it's leverage. Now, there are some benefits associated with leverage, but there's also some risks. Again, you have to really identify your risk to reward. It's very easy in real life to identify the risk to reward, but when it comes to trading in the markets, we often see that individuals never respect the risk, right? When you're driving somewhere, you're late to a specific destination, you have the option to speed up and make it there, and that's a reward, make it there on time, or you have the risk where you may get pulled over by a police officer, a sheriff, a state trooper, whatever it is in your area, where they may actually make you even more late, and they may provide you with a speeding ticket, and your insurance premiums may go up, right? And so that's the risk. And so in our everyday lives, we definitely understand whether it's a good idea to take the risk or reward. If it's a scenario where, hey, if I'm late again for this, I don't know, my job, I could get fired. Well, maybe you may take that risk. But again, you want to take what you do in your everyday life and apply that to the market, something that many people don't do. So why is it riskier that it's leverage? Well, one of the things you have to understand is that it could amplify your returns, but it could also magnify your losses. And so that's something that you want to keep in mind of, right? Now, a cool thing about it also being leveraged, though, one of the benefits is that, you don't have to trade options. If you're someone who doesn't like trading options, and if you don't know, options are leveraged, right? Financial derivatives, and they're leveraged, but they also have more risk associated with them, and they're more complex. So if you're someone who you don't like shorting, you don't like the mechanics of options, well, you could keep it very simple and trade the inverse ETFs. And yes, they are leverage, but the good thing is, although it is riskier, you have to find out for yourself whether that risk is something that you're willing to take, and it could provide some daily profits that are pretty good. I mean, without having to search for a penny stock that you never even heard of, or search for a random stock, you could trade this every single day, and when the market's going down, trade SQQQ, right? And it does about, look, 10% for a day is pretty good. I mean, that's absolutely great. That's phenomenal. Now, I also want to show you guys something else. So just like we have the inverse of SQQQ and we have the regular QQQ, we also have the triple leverage version of QQQ, which is TQQQ, right? So I know there's a lot of Qs being said, right? So you have QQQ, which is the NASDAQ Index ETF. You have TQQQ, which is the leverage version. So basically, whatever the regular NASDAQ does, TQQQ is going to do the same, but again, it's going to amplify the trading returns by 3 times. So this fell down 9.49%, right? So if you wanted to just trade the regular ETF, you can. But if you wanted to go ahead and use some leverage without having to tap into options, you could go ahead and trade, the TQQQ, right? If it's a good day, if the market's going upwards, like the day before, let's go ahead and look at that. The day before the market went upwards, you could have traded the regular QQQs and went upwards. Or if you wanted to use the leverage, you could have traded TQQQ and went upwards. But again, there is also the inverse leverage version, which is SQQQ. So hopefully that explains it very well. Now, something you want to understand is that these are instruments that you don't want to invest in. They're specifically made for trading, right? I even believe that in their prospectus for SQQQ and TQQQ, they mentioned that this is not something that you want to hold on to. This is just a trading tool. You don't want to hold on to it. I know some people say, well, if the market's going up, why not invest in TQQQ, right? Because it's going to go up and times it by 3, right? If it was a bullish market. Well, no, you don't want to do that, because it's also calculated daily. And so there's some math with that could mess you up. And again, it's just something that you could use to trade. Maybe you could do a swing trade for a few days, but it's not something it's not intended to hold for a long time. And they make it very clear in their perspective that this is not a tool for that. It's just a tool for trading. And it's also a good tool for hedging. For example, if you're someone who, on my channel, we talk about trading and investing, which are 2 separate vehicles, and you want to approach them completely differently, right? But if you're someone who you don't trade at all, but you also you invest, right? I say everyone should invest. Even if you're a trader, you should have an account where you also invest. And so if you're someone who's investing, right, and you have a portfolio, and obviously you're going long, right, and the market is actually going downwards, well, one way you could hedge is by going ahead and just trading the SQQQ, so that you could take advantage. Let's go ahead and look at this day. You could take advantage of the market going up. So while your portfolio is going downwards, you could take advantage of the market going upwards and then sell it at the end of the day. This way, although you lost in your overall portfolio, you did have some gains to pretty much hedge against that. And so it's also a great hedging tool. That's another topic I wanted to share with you guys. But at the end of the day, I just think it makes it much more simple to go ahead and reduce your niche to trading something as simple as inverse ETFs. Now, there's other inverse ETFs. For example, we could take a look at the SPY, which is ticker symbol. Let's go ahead and look for it, SPY, which is a S&P 500 index ETF. But there's also inverse ETFs for the SPY, right? And it's going to be L SPY. I apologize, is SPXL. I've said that backwards. And we see that it's basically the same thing as a SPY, but it's 3 times leverage. So if the SPY is doing 3%, well, SPXL is going to be doing 9%, right? Or just to simplify even more, if the SPY moves 1% for the day, SPXL is going to move 3%. Now, what's the inverse of it? So let's say if the market is going down and you want to take advantage of SPY going upwards, right? The triple leverage in ETF of it, it'd be SPXS, right? And so let's go ahead and type that, SPXS. And you're going to see it's the inverse triple leverage. So hopefully this video provided some utility for you guys. Again, I just wanted to go ahead and show you guys a different niche that you guys could look into when it comes to trading. And maybe you guys won't use this. Maybe you guys want to stick to a niche of only trading penny stocks, right? And that's fine. Or sticking to a niche of only trading mid-cap stocks or only mega-cap stocks. Or, you know, regardless, the point of this video is to show you guys a different niche and also encourage you guys to trade within the niche and not hop over from a whole bunch of stocks that trade differently. Again, you can do it if you're experienced, but it's much easier to trade something habitually. This way you get to understand how it moves oftentimes. But with that said, hopefully you guys enjoyed this video, and I'll see you guys on this next video right over here. Take care, guys.